have last session we discussed about technical analysis. These are all valuation techniques. Valuation techniques, the technical and fundamental analysis are the common method of evaluating the stock as well as the company. Friends, while discussing these things and fundamental, we have to discuss a lot of things. Fundamental involves, the fundamental itself have got a very meaning that it is because that is a fundamental of the company. Whether the company is financially sound, or are they good, are they working well, or their earnings are good, and how to value the company is for the perspective of investment in a long term as well as a short term. And whatever the way we need to do, because it is basically a financial assets. When we want to assess the financial assets, whether the price of the company, that is a share price of the company, whether it is reasonably priced or undervalued or overvalued or rightly valued, very difficult to understand. So that is the reason, that I have explained to you in the introduction itself that technical gives you the temporary future movement of price. That is predicting how the share price will move in the coming days based on the past data. But whether to buy that company or not, whether the company is fundamentally sound or not, that is more important to study. So while studying the fundamentals, what are the points we have to look at? See, we should understand the economy. Economy means it's a global economy and national economy as well as the regional economy. And then number two is that the industry. Industry means it does not mean that particular company. Industry means it's particular sector. Like, that cement industry, steel industry, IT industry, like that. That is an industry, whether the industry, particular industry are doing well or not. What is the industry status? Then we have to look at each company which we want to invest or we want to evaluate the valuation. Then how the competition is there. These are all the basic aspects we have to look into while we study about the fundamentals. When we talk about economy, the first point, how the economy behaves. See, economy, especially the Indian economy, basically is an agro-based economy. So it depends upon if the economy will do well based on the rainfall during that year, and also how the government is spending, and how the GDP is growing, and how the foreign exchange reserves, and then based on these, how the equity market behaves, a debt market based on the interest rate, and how the government addressing the budget, how allocate the resources, and also the political stability of the particular country. These are all basically, especially in Indian economy, it depends upon how the political stability, how the union government decides the budget allocations, and the Reserve Bank of India, how they're managing the funds on the debt market. And based on this equity market, how it's a bullish trend or in a bearish trend, or how the market behaves. So this is, when you want to understand the economy, you need to understand all these factors. You get my point. So the second point, what we have to look at the industry. When we talk about the industry, for example, sugar and textile, these are all cyclical nature. What is the business cycle? Whether there is throughout the year that the industry will do well, or it is based on certain parameters, and what is the long-term prospects, what is the short-term prospects, and how their export and imports are linked based on the international outlook. For example, you talk about iron ore. Iron ore, that the whole market depends upon how the country which is importing iron ore, the international market. Same, let us take the IT companies. Their performance depends upon the international outlook, mainly in American and European markets. If an American and European market is not ready to spend much, then definitely that will have more impact on these IT companies and especially software and everything. And how the industry, that particular industry, is linked with a global factors, and how a technology impact, because today the technology is growing like anything. Every day the technology getting updated, and some of them become an obsolete, the new technology overtaking. For example, that invention of mobile phone, especially that Android and iPhone, how they killed a lot of industries. You do not have a camera, you do not have film industries, that is a film for photography, and then transistors, radio, so many things have been impacted because of the technology factor. You get my point? So the technology, whether this particular industry is again, it's going along with the technology, or it will have a legal that impact in the future, whether it will survive or not. Based on that, we have to look at the particular industry, how the impact of the technology innovations, okay? And supply chain analysis, that is a more important today, especially that e-commerce, that how the supply chain is effective, and then how the government policies. For example, today the telecom, telecom is totally depend upon the government policies, because there is a space, the duty, the taxes, and so on, the cloud technology, and how government is taxing those resources. So these are all, industry specific policies of the government. We have to look at it while we study the fundamental analysis. Okay. Then now specifically, that is a macro studies. What we have seen in the first 3 slides is that one is that, economy, and the next is the industry. These are all, macro factors. But now once we have selected, okay, let us think that a cement industries, or an infrastructure companies, infrastructure industries, or a finance, or a banking, or NBFC, like that. So once we select that, then within that industry, which company we can invest? You get my point, friends? See that when you do, see ultimately what is all this? See, we want to do the selection of the company for an investment. Whether this company will do well or not. Is it safe to invest our money in this company or not? How to do that? So that is the reason we do a fundamental analysis. The fundamental analysis basically on a macro level, we have to look at the whole economy. For example, now let us say the COVID-19, that whole economy was crippled, and worldwide, and every sector was facing a crisis. There is a total lockdown. So that was the macro level picture. But within that, okay, having done all these things, and now I would like to choose which company I can invest. Then you need to do the company analysis, and the company specific. Therein, what all the need to be done? There is a ratio analysis, cash flow. So look at some non-balance sheet numbers and look at a number-based parameters. Okay, that means where you will get all these things. So you have to look at the annual report of the company. Okay, annual report of the company will provide all kind of information and numbers, and based on that we can do the analysis. Okay, I will look at that. First I will give you overall idea, then we go for specific. From the annual report, what are the things we have to analyze? We have to study on a ratio analysis. What is this? From the number, we have to do the liquidity ratios, solvency ratio, efficiency ratio, profitability ratios, valuation ratios, and also DuPont analysis. I'll explain one by one in the coming slides. Well, first of all, let me make you understand what is each ratio means. Okay, what is each ratio means? Now I'll say that these are all the ratio we have to do from the annual report or the balance sheet of the company. So the balance sheet and profit loss accounts, and that is more important. That gives you the proper picture about the company. From those numbers, we should arrive at this kind of ratios to understand the company's healthiness, and also that how the company will do in the future. See, not that what is doing today is more important. Ultimately, what we have to look at it while we do an investment and how that will do in the future. Okay, so that is also a more important factor. Otherwise, till now it's okay, but what will be the future? So we have to look at this kind of ratios. What is that? One is first ratio is called liquidity ratio. What is called otherwise the current asset ratio? What do you mean by that? Current assets divided by, that equivalent to cash plus marketable securities plus debtors plus inventories plus loans and advances and plus prepaid expenses. This is called current assets. I'm sure that you may not understand what these are all unless otherwise you have a balance sheet. Okay, and then unless you look at the balance sheet, then you may not be able to understand what is this. So I'm sure, first of all, the students, should know the accounts first. They should have fair knowledge on the accounting and how the trial balance is done, how the P&L is done, how the profit loss account is done, and the balance sheet is done. And based on that, unless you know what is the balance sheet, then I don't think that you will be able to understand any of these. And probably let me take you to one more slides that this is what, when I said, you have to look at the annual report of a company. What is the annual report? The annual reports have a financial highlights of the company, the management statements and management discussion analysis and financial highlights, corporate informations, directors report and report on corporate governance, financial section, and also AGM notice. This is what any annual report will be there. Okay, this is what I would like to tell you, that this is what, schedule of financial statements, that how the balance sheet look like. You have assets column and liability column. And that equity, liability, shareholders fund, these are all the liability side. You have, that current liabilities, non-current liabilities, shareholders. See, this is what, ultimately the balance sheet on the liability side. What is on the asset side here? This is what, this is a balance sheet. And let me make it a little bigger. So this is how any balance sheet look like. And I do not know how many of you have done a homework on understanding the balance sheet. If not, please, that you can right now today, you can have a lot of information on Google. You can go to any company's website. You can always download the balance sheet, understand what is a balance sheet. So this is just, I'm bringing you a model balance sheet of your next company, where that the liabilities column, that left side normally, shareholders fund, that is a share capital, plus reserves, that here you have the details, and that the share capital amount plus reserves coming here, subtotal and a grand total. And non-current liabilities. What do you mean by non-current liabilities? Current liabilities is a long-term borrowings, deferred tax liabilities, and long-term provisions. So these are all, liabilities. I'm sure that every one of you know the word liabilities. Liabilities means that the company have to repay this money at any point of time. Okay, that is the company's liability towards on those head. Maybe the shareholders' liabilities, for example, 170 crores, and no reserves and liability like this, and the borrowings, that the deferred tax liabilities and long-term provisions, And the current liabilities means short-term borrowings, trade payables, and other current liabilities, short-term provisions. That this all three major head to, for example, now 213 crore, for example. Now you have an asset column, and because this is what basically you need to understand that any balance sheet should have liabilities and assets. And liabilities always, all assets are equivalent to liabilities, or otherwise all liabilities should be equivalent to assets. Here you see the figure is that, see 213.94 crore, 213.94 crore. This is an asset, this is a liability. Always you should tally. That is a that is the features of an account, that it's a self-tallying system. So when you talk about assets, there is a non-current assets, which is called fixed assets, tangible assets, intangible assets, capital work in progress, intangible assets under development, non-current investment, long-term loans and advances, and other non-current assets. So this all put together, they brought a total. Then there is a current assets. Then current assets, it consists of inventories, trade receivables, cash and bank balance, short-term loans and advances, and other current assets. This is how any balance sheet will look like. Okay, so here I put you that all the any balance sheet assets are equivalent to liabilities. If you talk about a shareholders equity, that assets minus liability will become this figure, this 13,000. That is how any balance sheet look like. I'll show you some more also, that balance sheet, that how liabilities column, shareholders, non-current liabilities, current liabilities. What do you mean by current liabilities, non-current liabilities? Current liabilities means that it can be payable in a very short term. That is immediately or instantly or within a certain duration. Whereas non-current means it's a longer term borrowing, maybe 20 years, maybe 15 years, maybe 10 years, maybe 5 years, like that. Okay, this is how a balance sheet look like. And this is what an asset side. Because when you want to study the ratios, you should know, first of all, each nature of item. I am dividing the entire assets into two kind of an assets. One is the non-current asset and current assets. What do you mean by current assets? Current assets is easily liquidable, easily saleable, easily realizable. That is called current assets. Whereas non-current assets may take a longer time because we cannot do it immediately. See, which is what the current assets, including inventories, trade receivable, cash and bank balance, short-term loans and advances, and other current assets. When we talk about that assets, non-current assets, fixed assets like tangible assets, intangible assets, capital work in progress, intangible assets development, non-current investment, long-term loans and advances, and other non-current assets. So non-current assets, that's called fixed assets, that is called net block. Net block is equal to gross block minus accumulated depreciation. That is non-current assets on other item and current assets. This is what I have explained to you. I am trying to bring here. What is that? See here, the liquidity ratio. When we calculate liquidity ratio, what is the current assets? This is what I am bringing. Current assets. What is the current assets? Inventories, trade receivable, cash bank balance, short-term loans and advances. Okay, this is what here: cash, marketable securities, debtor, inventories, loans and advances given, and prepaid expenses. Okay, this is from this. If you want to arrive at a current assets, current ratio, so you need to do that. See, importance of each ratio, I will explain a little bit on the coming slides. Okay. Now the liquidity ratio, you have to do that. What do you mean by liquidity ratios? Current liabilities equivalent to loans and advances, which we have taken, plus trade creditors and accrued expenses and provision. This is what I shown you in the balance sheet. See here. here. Liabilities. Non-current liabilities, long-term borrowing, deferred current liabilities means short-term borrowings, trade payable, and other current liabilities, short-term provision. That is what here it shows. See here, current liabilities, loans and advances, trade and creditors, and expenses. Okay. So then you have to it is another ratio called a quick ratio. What is that? This is also called like an asset list. The quick, immediately to understand, the quick ratio is calculated like this: quick assets minus current liabilities. That means what? Current assets minus inventories. That means that these are all assets which can be liquidated so fast. Okay. Then solvency. Solvency is more important because this decides. What do you mean by solvency? I hope that most of you understand. That means you are in a worthy position. Solvency means you can redeem your liabilities. You are in a sound position. You can always repay your loan. That is called a solvency. Solvency means I am worth. So insolvency means I am worthless. That means that I cannot repay my debt. Manjal notice I become insolvent. Insolvent insolvent he cannot able to pay his debt. That means his liability is more than their assets. So he become insolvent. So the company, we have to understand whether the company is solvent. How to do that? That is called debt equity ratio. What do you mean by that? Their total debt divided by an equity. Equity means share capital. Okay. So then when you, whatever the ratio you are getting, that is called debt equity ratios. Then you have to understand debt and asset ratio. See, debt with an equity ratio, debt with an asset ratio. That means that this ratio measures the extent to which borrowed funds supports the firm's asset. That means that whether the company have a proper assets to take care of its debts, that means liabilities. Debt na enna kadan. இந்த கடனை அடைக்கக்கூடிய அளவுக்கு அவங்க கிட்ட சொத்து இருக்குதா அதை பார்க்கணும் நம்ம இந்த பேலன்ஸ் ஷீட்ல. ஓகே, this is what called debt asset ratio. Then the interest coverage ratio. These are all called solvencies. You know, solvency na enna சொல்லிக்கிறேன்? I am properly supported by my assets over my loan. That means that do I have a proper earning to pay my interest? நான் கடன் வாங்கி இருக்கிறத அந்த கடனுக்கு உள்ள வட்டியை பே பண்ணக்கூடிய அளவுக்கு என்கிட்ட வருமானம் இருக்குதா இல்லையா இந்த கம்பெனில, அதுதான் இந்த ரேஷியோ indicate that. So earnings before interest and taxes plus a depreciation, that is called EBIT, you know, divided by interest. Then you get the earning before. I will show you that profit loss account. Okay, so that you will understand. This is called, you know, that profit loss account. You know, what is the revenue of the company, what is the expenses of the company, what is the total revenue, what is the total expenses, then profit before exceptional item and profit before taxes, how much, what is that, then your tax, current tax, deferred tax, and profit for the year. This is how your profit loss account look like. So that from here you will get all the figures. From there you can always understand that how much is the sale is happening in the company, what is their stock in trade, how much revenue from sale of product they could able to get it, and net revenue from the sale of the product, and you know that sales of services like that, that other operating revenue, total revenue from the operations. Okay, so that interest income, how they are coming, dividend, insurance, scrap sales, cash discount, so many things, whatever the total other income gets. So you will get like this. Okay, this is what, balance sheet, profit loss account balance sheet look like. So from that, you can always find out, what is the earning before the interest and taxes plus depreciation. This figure divided by interest, how much you have paid. Okay, so this will give you the ratios, whether there is proper interest coverage is there or not. These are all very, very important points which we have to remember and while studying the balance sheet. Okay. Then the next solvency ratio is equal to debt service coverage ratio. What is that? What is the difference between this? This is an interest coverage ratio. What do you mean by that? See, நம்ம எவ்வளவு டோட்டல் கடன் வாங்கி இருக்கிறோமோ அந்த கடனுக்கு வட்டி கொடுக்கிற அளவுக்கு அந்த கம்பெனிக்கு இன்கம் இருக்கா அப்படின்னு பாக்குறது தான் இந்த ரேஷியோ. Whereas this one is that டெட்னா நம்ம லோனை ரீபே பண்ணக்கூடிய கவரேஜ் இருக்கா. டெட் சர்வீஸ் பண்ணோம்னா என்ன அர்த்தம்? லோனை ரீபே பண்ண, இன்ட்ரெஸ்ட் சர்வீஸ் பண்றதுல வட்டி கொடுக்கறது பிளஸ் இங்க வந்து என்னன்னா இன்ஸ்டால்மெண்ட் ஆஃப் லோன். நம்ம இப்ப 10 லட்சம் ரூபாய் லோன் வாங்கி இருக்கிறோம்னு சொன்னா அந்த லோனை நம்ம மாசம் மாசம் கட்டக்கூடிய அளவுக்கு நம்ம கிட்ட ஃபிகர் இருக்கா, அந்த கம்பெனியோட பெர்ஃபார்மன்ஸ் இருக்கா, அதை எப்படி கண்டுபிடிக்கிறது? சோ இன்ட்ரெஸ்ட் பிளஸ் டெட் ரீபேமெண்ட் பரான, அதாவது வட்டி கொடுக்கறது இல்லாம அசல்ல எவ்வளவு வருஷம் நம்ம திருப்பி இன்ஸ்டால்மெண்ட் கட்டணும். ஈக்குவேட்டட் இஎம்ஐ, நீங்க அந்த வெஹிக்கிள் லோன் வாங்கிருந்தீங்கன்னா உங்களுக்கு தெரியும், தட் இஸ் கால்டு ஈக்குவேட்டட் மந்த்லி இன்ஸ்டால்மெண்ட். அது என்ன? அசல், அதாவது பிரின்சிபல் பிளஸ் இன்ட்ரெஸ்ட் ரெண்டு சேர்ந்து தான் வரும். இந்த ரெண்டுத்தையும் கட்டுற அளவுக்கு இந்த கம்பெனில பலம் இருக்கா, கம்பெனில பணம் இருக்கா, அதை எப்படி கண்டுபிடிக்கிறது? வாட் யூ ஹவ் டு டு தட், யூ ஹவ் டு அண்டர்ஸ்டாண்ட் ப்ராஃபிட் ஆஃப்டர் டாக்ஸ், தட் இஸ் கால்ட் PAT பிளஸ் டிப்ரிசியேஷன். நம்ம இந்த இன்வெஸ்ட்மெண்ட் பண்ண பிளான்ட் அண்ட் மெஷினரிக்கு ஒரு டிப்ரிசியேஷன் கிளைம் பண்ணுவோம். பட் ஈவன் தோ தட் இஸ் டேக்கன் அஸ் எக்ஸ்பென்சஸ், பட் தேர் இஸ் a cash flow from that. Okay, then plus interest, this is divided by interest plus debt repayment பண்ணீங்கன்னா you will get some figure that is called debt service coverage ratio. Okay, so then the next ratio is the dividend coverage ratio. Company வர லாபத்துல டிவிடெண்ட் கொடுக்கிற அளவுக்கு is there any end, that is earnings after tax, then divided by what is the preferred dividend, that is called dividend coverage ratio. Then the next is that profitability ratio. Friends, I go back to the slides, then you need to please remember that, see what all the ratio will give you the fundamental analysis. I have given you, there are 5 ratios. One is that the liquidity ratio, another is the solvency ratio, another called efficiency ratio, then profitability ratio, then valuation ratio. புரியுதா? இந்த ரேஷியோஸ் நம்ம பண்ணோம்னா இந்த ரேஷியோ ஒரு பர்சன்டேஜ் கிடைக்கும். இந்த ரேஷியோ பண்றதுனால மட்டும் கம்பெனி நல்ல கம்பெனி சொல்ல, இந்த ரேஷியோ நம்ம ரீட் பண்ணணும். On getting that, for example, you go for a blood test. Blood test பண்ண பிறகு என்ன பண்றோம்? ஃபாஸ்டிங்ல எவ்வளவு சுகர் இருக்கு, தென் போஸ்ட் பராண்டியல் எவ்வளவு சுகர் இருக்குன்னு பார்க்கணும். அப்ப அதை வந்து என்ன பண்ணணும்? பெஞ்ச்மார்க் கூட நம்ம பண்ணணும். எவ்வளவு இருந்தா நார்மல், எவ்வளவு இருந்தா அப்நார்மல் அப்படின்றத டாக்டர் சொல்லுவாங்க. இப்போ ஃபார் எக்ஸாம்பிள், சப்போஸ் my blood sugar level is on fasting 100 அப்படின்னா ஓகே, 100 level is acceptable. Suppose if it is my 140, that means that you can in the range of 90 to 100, but you are with a 130, that means 30 point you are in a excess of glucose. புரியுதா? அப்ப இந்த ratios analyze பண்ணோம்னா you will get some kind of a number. That number will have to study that whether the company is a healthy or not. அதுல இத முதல்ல நம்ம எக்ஸ்ரே பண்றோம், எக்ஸ்ரேவை ரீட் பண்ண பிறகுதான் பேஷண்ட் ஹெல்த்தியா இல்லையான்றதை நம்ம பார்க்கணும். புரியுதா? சோ இப்ப இந்த ஸ்டடி பண்றதே நம்ம எதுக்காக? ஒரு கம்பெனி ஆர் தே டூயிங் வெல், the company financially sound இருக்கிறாங்களா இல்லையா, that is what the most important. அத கண்டுபிடிக்கிறதுக்கு you have to find all these things. இப்ப நம்ம ஹாஸ்பிடல் போனோம்னு என்ன சொல்றாங்க? ஃபர்ஸ்ட் பிபி எடுங்கன்றாங்க, பிளட் டெஸ்ட் பண்ணுங்கன்றாங்க, இசிஜி எடுன்றாங்க, எக்ஸ்ரே எடுன்றாங்க. தென் இதெல்லாம் பண்ணாதான் உங்களுடைய பிசிக்கல் ஹெல்த்தை அவங்களால அசஸ் பண்ண முடியும். புரியுதா? How the doctors is doing same way, we are if the company வந்து ஹெல்த்தியா இருக்காங்களா இல்லையா அப்படின்றத எப்ப கண்டுபிடிக்க முடியும்? அந்த கம்பெனியோட பேலன்ஸ் ஷீட் எடுக்கணும். அந்த பேலன்ஸ் ஷீட் நம்பர்ல இந்த ரேஷியோலாம் நம்ம அனலைஸ் பண்ணோம். அனலைஸ் பண்ண பிறகு அந்த ரிசல்ட்டை வச்சுக்கிட்டு வெதர் த கம்பெனி இஸ் ஹெல்த்தி ஆர் நாட் அப்படின்றத நம்ம கண்டுபிடிக்கணும். புரியுதா? ஆர் யூ கிளியர்? So what we have seen so far is that liquidity ratio. இது எதுக்காக பண்றதுன்றதால நான் மறுபடியும் எக்ஸ்பிளைன் பண்றேன். முதல்ல ஃபார்முலாவை சொல்றேன். இந்த ஃபார்முலா முடிஞ்ச பிறகு ஈச் ரேஷியோஸ் how it is working அப்படின்றத நான் சொல்றேன். ஓகே. Now current liabilities போடுறோம் liquidity ratioல, quick ratio, they become a solvency ratio. இது வரைக்கும் ரெண்டு இது வந்து liquidity ratio, மூணு வந்து liquidity ratio. Then what we are doing is that solvency. Whether the company liquidity ratio என்ன? திடீர்னு ஒரு கம்பெனியை நம்ம டிசால்வ் பண்ணணும்னு சொன்னா do we have a sufficient liquidity இருக்கா அந்த கம்பெனில, எவ்வளவு இருக்கும் அதெல்லாம் கண்டுபிடிக்கிறதுக்காக தான் liquidity ratio. ஓகே. solvency என்ன? whether we are sound enough to repay my interest, repay my debt. கடன் வாங்குறத கடன் கொடுக்குற அளவுக்கு நம்ம கிட்ட சொத்து வருமானம்லாம் இருக்குதா? so what we do that debt equity ratio பண்றோம், debt asset ratio பண்றோம், then interest coverage ratio பண்றோம், then debt coverage ratio, debt service coverage ratio. Okay, these are all called solvency ratio. Then dividend கொடுக்க முடியுதா அப்படின்றத பார்க்கணும். Now whether the company is running in a profit or not, profitability ratio பார்க்கணும். Because சொத்து இருந்தா மட்டும் பார்த்தாது, there should be a sufficient profitability. நம்ம எவ்வளவு கேபிட்டல் போட்டுக்கிறோமோ அந்த அளவுக்கு அந்த கம்பெனில லாபம் வருதா அப்படின்றத நம்ம பார்க்கணும். ஓகே. So what is the profitability ratio? How to do that? The first one is called gross profit margin ratio. That means what? Gross profit multiplied by 100 divided by net sales. அது என்ன? ஒரு பொருள் தயாரிக்கிறதுன்னு சொன்னா அந்த பொருள் தயாரிக்கிறதுல நமக்கு லாபம் இருக்கா இல்லையா? இப்ப 100 ரூபாய் ஒரு பொருள் தயாரிக்கிறது 90 ரூபாய்க்கு நம்ம வித்துக்கிட்டு இருக்கோம்னு சொன்னா we do not have a gross profit margin at all. Whereas 100 ரூபாய் my production cost, whereas I am selling at 150 rupees, my gross profit margin is a 50%. So அதனால net sales, gross profit divided by net profit. Okay. Then operating profit. இது வந்து manufacturing gross profit என்றது first manufacturing side ல இருந்து வர்றது. Then there are a lot of operating expenses like marketing, advertisement, traveling, promotions, so on. So the operating profit என்றது என்ன? The operating profit divided by sales. அப்ப என்ன மார்ஜின் கிடைக்கும்ன்றது தெரியும். So net profit margin ratio. Same way profit after tax payment பண்ண பிறகு divided by sales ல பண்ணோம்னா we get a percentage. Then that will be a net profit margin. புரியுதா? Okay. So return, then next one is that return on capital employed. What do you mean by that? ஒரு பிசினஸ்ல நம்ம எவ்வளவு கேபிட்டல் இன்வெஸ்ட் பண்ணிருக்கோம், டோட்டல் கேபிட்டல் எம்ப்ளாய். அந்த கேபிட்டல் இப்ப 1000 கோடி ரூபாய் நம்ம ஒரு பிசினஸ் இன்வெஸ்ட் பண்ணிக்கிட்டோம்னு வச்சுக்கோங்க. டோட்டலா 100 ரூபாய் தான் ப்ராஃபிட் வருது அந்த கம்பெனிக்குனா பட் இஸ் தட் இட்ஸ் வெரி வெரி நெக்லிஜிபிள். 1000 கோடி இன்வெஸ்ட் பண்ணி 100 ரூபாய் சம்பாதிக்கிறதுக்கு எதுக்கு அந்த பிசினஸ் நம்ம பண்ண தேவை? அந்த மாதிரி கம்பெனில நம்ம போய் இன்வெஸ்ட் பண்ணணும். ஓகே. So return on capital employed, அது எப்ப கிடைக்கும், எப்படி கிடைக்கும் அந்த நம்பர்? So EBIT, that means earning before depreciation, interest and tax divided by capital employed. இப்ப 100 கோடி ரூபாய் நம்ம 200 கோடி ரூபாய் ப்ராஃபிட் வந்திருக்கு அப்படின்னு சொன்னா அதை டிவைடட் பை எவ்வளவு கேபிட்டல் போட்டு பண்ணா you will get a percentage. So that will give you the idea what is the return we are getting on the capital employed. The next ratio is called return on net worth. ரெண்டுத்துக்கு வித்தியாசம் இருக்கு. return on capital வேற, return on net worth. What do you mean by that? Capital நம்ம 5 கோடி ரூபாய் முன்னாடி போட்டுருக்கோம். இன்னைக்கு டுடே 20 வருஷம் கழிச்சு நம்ம லாபம் நிறைய ரீபே பண்ணி ரிசர்வ்ஸே வந்து we would have built 1000 crore. 100 கோடி ரூபாய் இன்வெஸ்ட் பண்ணிருக்கோம். இன்னைக்கு 1000 கோடி ரூபாய் ரிசர்வ்ஸ் பில்டப் ஆயிருக்கும். பட் நம்ம கடன் 200 கோடி ரூபாய் இருக்கும். டோட்டல் அசெட்ஸ் மைனஸ் லயபிலிட்டிஸ் பண்ணோம்னா வாட் இஸ் அவர் நெட் ஒர்த்? 1000 கோடி ரூபாய் எனக்கு சொத்து இருக்குது, 200 கோடி ரூபாய் தான் நமக்கு கடன் இருக்குதுன்னா my net worth is around almost 800 crores. அப்ப இந்த 800 crores-க்கு என்ன ரிட்டர்ன் நமக்கு கிடைக்குது? Profit after tax divided by net worth. அப்ப you get a percentage. அப்ப 1000 கோடி ரூபாய் 800 கோடி ரூபாய் எனக்கு நெட் ஒர்த் இருக்குது, 80 கோடி ரூபாய் நான் ப்ராஃபிட் வருது, நெட் ப்ராஃபிட் வருதுன்னு சொன்னா that means almost around 10% return on net worth கிடைக்குது. இப்ப 2% தான் கிடைக்குதுன்னு வச்சுக்க on my net worth. எதுக்கு நான் அதை பண்ணணும்? I can very well do that in a fixed depositல போட்டு நான் 5.5% வட்டி வாங்கி பேங்க்ல, still I get a better return. புரியுதுங்களா? am I clear? இதெல்லாம் கொஞ்சம் டஃப்பான சப்ஜெக்ட். நம்ம வந்து பேலன்ஸ் ஷீட் தான் சொல்றேன். பேசிக்லி நம்ம இந்த ஃபண்டமெண்டல் அனாலிசிஸ் புரிஞ்சுக்கணும்னு சொன்னா நம்ம we should have a basic accounting knowledge. அக்கவுண்ட்ஸ் தெரியாதவங்களுக்கு இதை பத்தி பேசினா ஒன்றும் புரியாது. அக்கவுண்ட்ஸ் தெரிஞ்சுக்கணும்னு சொன்னா நம்ம வந்து we should study what is profit loss account of any company, what is balance sheet of any company. நம்ம படிக்கணும். அது ஜேர்னல் என்ட்ரினா என்ன, அண்ட் கேஷ் புக்னா என்ன, கேஷ் ஃப்ளோனா என்ன, கடன்னா என்ன, டெட்னா என்ன, எவ்ரி வேர்ட் ஆஃப் பேலன்ஸ் ஷீட் we need to understand. இது ரொம்ப வெரி பெரிய சப்ஜெக்ட். இந்த சப்ஜெக்ட் வந்து டீப்பா படிக்கணும், ஹோம் ஒர்க் பண்ணணும், அப்பதான் இதை புரிஞ்சுக்க முடியும். ஒவ்வொரு வார்த்தைக்கும் we have to find out what is net worthனா தெரியணும், what is patனா தெரியணும், what is profitனா தெரியணும், what is marginனா தெரியணும், what is the capitalனா தெரியணும். every word we need to understand properly. இது நம்ம புரியலன்னு சொன்னா இந்த ஃபண்டமெண்டல் அனாலிசிஸ் நம்மளால வந்து மாஸ்டர் பண்ண முடியும். நீங்க நாளைக்கு ஈக்விட்டி ரிசர்ச் ஒரு ப்ரொஃபஷனலா போகணும் அப்படின்னு நினைச்சீங்க சொன்னா, if you want to go as a professionalist, then you need to know all these things. You can always do that kind of things. Okay, and then all these things you have to understand. So that is the reason I again I am telling that the fundamental analysis பண்ணனும் சொன்னா you should have a basic knowledge of accounts. Okay, now we have seen what is the profitability. Now the next one, how the company is efficiently managed. See, profit on the are we efficiently working? That is most important. These are all the parameters we have to understand. What is that? There should be a working capital turnover. Now working capital and other every word is important. Working capital நம்ம வந்து ஷார்ட் டேர்ம், அதாவது என்ன, கம்பெனிக்கு ரெண்ட், சேலரி, ரா மெட்டீரியல் வாங்குறது, ப்ராசஸிங் பண்றதுக்குள்ள ஷார்ட் டேர்ம் பீரியட்ல இன்வெஸ்ட் பண்றதுக்கு இது நான் உங்களுக்கு முன்னாடியே சொல்லி கொடுத்துருக்கிறேன். வாட் இஸ் அ லாங் டேர்ம் ஃபைனான்ஸ், வாட் இஸ் அ ஷார்ட் டேர்ம் ஃபைனான்ஸ் சொல்லி கொடுத்துருக்கிறேன். அந்த ஷார்ட் டேர்ம் ஃபைனான்ஸ்ல ஒர்க்கிங் கேபிட்டல் இஸ் த மெயின் பார்ட். அந்த ஒர்க்கிங் கேபிட்டல் எவ்வளவு ஃபாஸ்டா நம்ம ரொட்டேட் பண்றோம் பிசினஸ், அது ரொம்ப ரொம்ப முக்கியம். அதை வந்து சப்போஸ் ஒர்க்கிங் கேபிட்டல் 6 மாசத்துக்கு வச்சிருக்கிறோமா, இல்ல 3 மந்த்ஸ்க்கு வச்சிருக்கிறோமா, 1 மந்த்துக்கு வச்சிருக்கோம், ஹவு ஃபாஸ்ட் வி ஏபிள் டு ரியலைஸ். அது என்ன அர்த்தம்? ரா மெட்டீரியலை எவ்வளவு சீக்கிரம் நம்ம ப்ராசஸ் பண்ணி ஃபினிஷ்டு குட்ஸா மாத்திரம், அண்ட் பிளஸ் எவ்வளவு தூரம் சேல் பண்ணி திரும்பி அந்த சேல் ப்ரொசீட்ஸ் ரியலைஸ் பண்றோம். This cycle called most important to decide profitability and efficiency of any company. Okay. So that working capital means sales divided by working capital போட்டீங்கன்னா உங்களுக்கு ரேஷியோ கிடைக்கும். அந்த ரேஷியோ வந்து ஹெல்த்தியா இல்லையான்றது அப்புறம். Then receivables turnover ratio. What do you mean by that? When we sell something or when we do service something, how fast we receive that income into the company. Whether it takes normally நீங்க credit sales பண்ணும்போது 1 month realization, 2 months realization, 3 months realization, sometimes 6 months realization, and more fast you get the receivable, the company efficiency is good. Suppose you take 6 months time, 4 months time, 5 months time to realize your sales amount. That shows that the company receivables are at a very long period. That means that your debt coverage is high, your interest coverage will be high, your rotation of the working capital is very less. That is how it will go on. Okay, so you have to do what is the receivables. how fast the receivables we are getting back. That is most important. Then inventory. This is one of the most aspect every one of you as a student of management and finance, you should understand the inventory to the turnover ratios. You know that inventory na enna artham, stock, raw material stock ஒரு பக்கம் வச்சிருப்போம், finished goods stock நிறைய வச்சிருப்போம். The inventory built up ஆக, that means it become an idle, lot of money gets blocked into that, realization will take. These are all find out, you know, how the company is efficiently running. There are company pathina just inventory irukad, line just in time inventory. Ipo vanda 5 நிமிஷத்துக்குள்ள production முடிஞ்சு 5 நிமிஷம் goods sale ஆயி. So that is how the people realize that, you know, that how inventory turnover we do that. So inventory is divided by cost of goods sold is a more important ratio. So now the fourth part we are coming for the valuation ratio. Now என்னென்னல பார்த்தோம், நம்ம இதுக்கு முன்னாடி என்ன பார்த்தோம்? Liquidity ratio பார்த்தோம், solvency ratio பார்த்தோம், efficiency ratio பார்த்தோம், profitability ratios பார்த்தோம். Now we will see at the valuation ratio. Valuation எப்படி இப்பதான் we are coming, இதெல்லாம் பண்ணாதான் நம்ம valuationக்கு வர முடியும். இந்த கம்பெனி நல்ல கம்பெனியா, ஒர்த்தான கம்பெனியா இல்லையான்றதா இதெல்லாம் பண்ணாதான் தெரியும். Then what we do that we arrive at earning per share, EPS ன்னு சொல்றது. That means that the profit after the tax divided by the number of shares, that is a net profit divided by number of ஒரு ஷேருக்கு highest earning இருக்கா, lowest earning இருக்கான்னு தெரிஞ்சு போயிடும் இந்த கம்பெனியோட. Then the price earning ratio, what is that? That's called PE multiples ன்னு சொல்லுவோம் மார்க்கெட்ல. So market price divided by EPS. இப்போ உங்க EPS வந்து 10 ரூபாய் இருக்கு, that marketல வந்து நம்ம ஷேர் பிரைஸ் 100 rupees போயிட்டு. That means that market price 100 divided by EPS 10, then equivalent to 10. That means your PE multiple 10 times. நம்ம earning ஓட 10 மடங்கு நம்மளுடைய market price இருக்குது. 5 மடங்கு இருக்கா, 10 மடங்கு இருக்கா, 200 மடங்கு இருக்கா, 100 மடங்கு இருக்கா அப்படின்றது தெரிஞ்சு போகும். That shows that how far our company is valued in the market. Am I clear, friends? Okay. So the next valuation is that price earning growth. We not only look at the ratios, how it's growing year on year. The price earning growth எப்படி வருது? Price earning divided by growth, number of years, how it is consistently going up. Then cash earning per share. Earnings என்றது வேற, cash earnings என்றது வேற. Ultimately, after giving everything, how much cash flow is coming to the company. We will look into that. Those aspects we will look into that. How the cash flow, how it is calculated, the cash earning divided by number of shares. So this is another valuation ratio. Then the dividend payout ratio, and how the dividends after the payout, profit after tax. Then what is the dividend rate? The dividend per share divided by market price per share. This is the formula. Okay. Then book value per share. Book value na enna, oru and the profit, that is the reserves and capital divided by number of, that is called a net worth. Net worth divided by number of shares. அப்ப நான் 100 ஷேர் போட்டிருக்கிறேன்னா அந்த book value market rate 50 ரூபாய் இருக்குன்னா book value எவ்வளவு இருக்கு? 50 ரூபாயில இருக்கா, 40 ரூபாயில இருக்கா, 30 ரூபாயில இருக்கா? Okay. Then market to book ratio. What do you mean by that? அதான் நம்ம market price 100 rupees இருக்கும், book value of the company maybe 50 ரூபாய் இருக்கும், sometime maybe 500 ரூபாய் இருக்கா. So அத நம்ம மார்க் பண்ணும்போது mark to the market பண்ற மாதிரி, market price per share divided by book value பண்ணும்போது, whether it's higher the market book value or lower the book value. இப்ப கம்பெனியோட book value of the share 200 ரூபாய், மார்க்கெட்ல அந்த கம்பெனியோட ஷேர் வந்து 20 ரூபாய்க்கு போயிடும். That means what? Its value ரொம்ப கம்மியா கோட் ஆயிடும். கம்பெனி புக்கே அப்படின்னா என்ன அர்த்தம்? புக் வேல்யூன்னு என்ன அர்த்தம்? நெட்வொர்க். நெட்வொர்க்னா என்ன அர்த்தம்? எல்லா கடனும் போக இருக்கிற சொத்து மதிப்பு. நாளைக்கு நம்ம கம்பெனி டிசால்வ் பண்ணா கூட எவரி ஷேர் ஹோல்டர் வில் கெட் 200 rupees per share. 200 rupees ஒரு ஷேர் கம்பெனிலே டிசால்வ் பண்ண கிடைக்கும் போது மார்க்கெட்ல 20 ரூபாய்க்கு தான் அந்த ஷேர் விற்கிறாங்கன்னு சொன்னா why not? It's the underpriced, right? These are all the indicator we will do that. So there is a one more analysis called a DuPont analysis. இந்த analysis என்ன சொல்லுது? Fundamental analysis க்கு இந்த DuPont என்ன சொல்லுது? DuPont, it's developed by DuPont. இவர் என்ன சொல்றாரு? He believes that the economy, that the company should strive to increase its return on net worth, that is a return to shareholders. This analysis attempts to break down this return on net worth into 3 basic components. In the analysis enna soludha, return to shareholder net worth 3 components are particular. One is reflecting the quality of earning along with the possible level of risk, that is called return on net worth, RONW. Okay, that is a PAT minus net worth. Return on net worth எப்படி கண்டுபிடிக்கிறோம்? PAT என்ன? Profit after tax. So divided by net worth. So this is generally broken down into PAT தனியா கொடுக்கிறோம், sales into sales divided by, that is a cash earning into cash earning, again divided by net worth. That first leg indicates profitability, the second leg indicates efficiency, the third leg indicates solvency, and last gearing. புரியுதா? How gearing னா அர்த்தம்? நீங்க ஸ்பீட் ஃபர்ஸ்ட் கியர்ல போறோம், செகண்ட் கியர்ல போறோம், தேர்ட். ஃபர்ஸ்ட் கியர்ல போகும்போது ஒரு ஸ்பீடுக்கு மேல போக முடியும், செகண்ட் கியர்ல போகும்போது அதுக்கு மேல போக முடியும், தேர்ட் கியர்ல போகும்போது அதுக்கு மேல போக முடியும். Oh, every gear, the go to the top gear means you can go faster, the wheel rotations, you know, that faster. அது மாதிரி gearing. Gearing na அர்த்தம்? You are in a high gear or a low gear or a medium gear. So that shows that how fast the company is growing. இதுதான் the DuPont உடைய formula analysis, DuPont analysis. இந்த analysis பண்ணோம்னா நம்ம we can find out the company is fundamentally sound or not. புரியுதா? So that the next one, how the growth track of the company, growth over the last year, growth over the past number of years in terms of sales, in terms of profits, in terms of earning per share, in terms of reserves. So when we look at this, all these things, last few year balance sheet, we will understand how the growth over the past number of years. புரியுதுங்களா? என்ன sales improvement இருக்கா, profit improvement இருக்கா, earning per share improvement இருக்கா, reserves built up ஆயிருக்கா, எல்லாம் whatever we do, we can all understand from the balance sheet. We will look at that. We could not conclude this topic today. It is a more interesting topic. We have to learn a lot, but I expect every one of you please go and do some homework on this so that you will understand better. So the next most important in the fundamental analysis to study on the funds. That is a fund flow. That is increase in liabilities is a source. Increase in asset is an application. In operating activities, that is a profits, and working capital requirement, investment activities, and financing activities. So these are all deciding how the funds are effectively utilized in the company. எவ்வளவு liabilities வாங்கிக்கிறோம் அப்படினா ஃபண்ட் உள்ள வந்துட்டு இருக்கு, எவ்வளவு அசெட் இன்க்ரீஸ் பண்ணிக்கிறோம், தட் மீன்ஸ் அந்த அளவுக்கு நம்ம ஃபண்ட் அப்ளை பண்ணிக்கிறோம், இன்வெஸ்ட் பண்ணிக்கிறோம். The profit is mainly how operating activities, how working capital requirement is less or more, then how we do our investment, and how financing is done, financing activities. Okay, so each one we have to look at it. Then in addition to all these things, balance sheet, there are something which are not reflected in the balance sheet. Okay, which are all non-balance sheet numbers, which also we have to take into account, because sometimes, you know, some of the important numbers may not reflect in the balance sheet. What are this? Say like a production quantities and sales quantities, inventories, consumption ratio, capacity utilization, imports and exports, materials, especially others, and per-employee figures. Nowadays, you know, so most of the corporates who are, you know, in the civic compliances, all these things are already brought into the balance sheet. The balance sheet have to indicate about inventories, capacity utilization, ratios, how electricity is consumption. All these things are now reflected in the annual report. Okay. Then you know that there are some more non-balance sheet numbers that per square feet figures, per cubic feet figures, changes in the excise duty rates, changes in the sales tax. That nowadays sales tax is not there, excise duty is not there, all become GST. And what is the changes in the product prices, material prices, as well as the forex. Okay. Then with regard to another qualitative parameters is about see, what we have seen is the quantitative. Now we go for a qualitative numbers, brand image, the company's reputation and management reputation, market share, either aggressive or lacking, and quality systems, performance of other group companies. These are all additional qualitative parameters we have to take into account to decide whether we can do investment or not. Okay. So there is a superior quality of earning and inflation immune sector. Some sectors, they don't bother about the inflation because that is immune. That means that is well built, which will not get affected whether the inflation goes down or comes up. And that good valuation given the projected earnings. And basically the two fundamental values, one is that return on capital employed and price to earning ratios. These are all helpful. Why we are teaching all these things now. Ultimately the next chapter we are going to teach you on portfolio construction, portfolio management, portfolio evaluation. You get my point. Very, very interesting topic, very interesting. You can read, and so that you will know that see, I am step by step I am taking you. First, we have introduced what is the financial market, and out of which how the regulation is done, what is the money market, what is the capital market, and how the capital market is a primary market and secondary market is functioning. What are the regulatory aspects of the financial market? Then how to choose the companies on a valuation path, how to do the technical valuation. And now we are looking at how to do the fundamental valuation, so that you are going step by step, upgrading your knowledge to do the portfolio selection, portfolio construction, and portfolio management, and portfolio reworking, and rejigging, and portfolio management. Okay, so that this is how I take you step by step into the system, so that you will go one by one, understand things better. But most of the things you look for as if you understand, but after some time you may forget. The better things that you have to do the homework, you have to do some more analysis, you have to go back to the books and library and Googles and so on, and find out this how it is working. Come with a doubt, so that your doubts can be clarified to make a better understanding. So what we have to do when we go for a portfolio, then companies with a lower price earning than the industry peers. These are all, where we look out right now. We are not, we need not worry about this. And however, we will go when we do the portfolio management. Okay, how to select the portfolio, how to construct the portfolio, what are the risk and ratios we have to look at it, all these things. See, today I gave you, friends, just look about and what is the basic of fundamental analysis. When if you want to do fundamental analysis, what are the ratios you have to read from the balance sheet? Then based on that, how we can decide whether we can select this particular company, whether we can invest in this company or not. Okay. And any doubts? And please let me clarify. Then this is only a first part of the fundamental analysis. We will next session, we will do the second part of fundamental analysis with a balance sheet and with the profit loss. Okay. Thank you so much. If you have any doubt, I will wait for you to clarify. Okay, if there is no questions, and probably I will wind up. Thank you so much. We will see you in the next class. Thank you.
Thank you, sir.
Thank you.